Hi, welcome to the market alert for Monday the 9th of November 2015. And starting off in the 5-minute chart, this big bar that you can see here is the release of the non-farm payroll figures. Get that out, it's an early start. And on Friday you will see that we had a 271k against a 181k forecasted figure and 137 previous. So the labour market found 100,000 more jobs than was expected, and you're probably wondering why the Dow actually went down. Well, that's quite easy. That's because the strong labour market that Yellen keeps barking on about has actually come to fruition, if the figures are to be believed. So let's take them on face value to begin with. So 100,000 increase in the labour market figures there. That's bad news for Yellen. She's going to have to increase interest rates, or there's going to be more pressure on her to actually do this. The good news for her, though, is that in between now and December the 16th, we could have another bad report, and that will actually cancel out this one. But who knows? Who knows indeed. So it's a case of Friday, the figures came out. If interest rates go up, the stock market goes down. Goodness knows what will happen if to the bond market and also the derivatives market if interest rates do go up. It will be a very interesting one. I also learnt on Friday as well that Lagarde, the head of the IMF, she used to own a law firm that employed 2,700 lawyers specialising in derivatives, and that seems to tie in quite well with why she's been on the blower to Yellen, saying don't increase interest rates just yet, probably because she knows that the quadrillion or so, or 100 quadrillion or whatever it is now, forget, of derivatives that are floating around, leveraged up to the eyeballs, all of the banks, could have a major problem. So with her being a specialist in the derivatives market is probably the reason why she has had a word in the boardroom, as it were. So let's see what happens on December the 16th. But in between then, we've got about 5 weeks of all of the nonsense about whether they're going to go up or not. But that's something we'll just have to live with. But it'll be interesting to see what happens on December the 16th. It will certainly be an interesting day, to say the least. So this caused a huge amount of volatility, and of course the plunge protection team were out in force. You know, if you want to go long, you know that the Federal Reserve have got your bet covered, because they'll keep buying the market to keep the market up. But again, so you see the market coming down and then going up. We see the market stopping at the psychological level there of 17,900 resistance. So it was on the previous day. The market all the way back down to 800. The reason we didn't get any signals here is because these bars are 50 and 60 points and over the 25. If I can see it, there we go. They're greater than the 25-point range. So that's why the signals don't actually appear until later on in the session. When we get to the evening session, the volatility's calmed down, and then we have a short that fails, we have a long that goes on to recoup the loss and more, and then we have a short at 25 past 7 that comes down, and then at 10 to 8 we have a long that goes all the way back again. So a nice profitable end to the week following the initial loss there, because they don't want the market to go down. We know that the shorts are very difficult to actually make money on at the moment because of, or if they do, then you've got to take it off the table like there when you get down to the psychological levels, because they want the market to move to the upside. So we had this huge range, 150 point range, and then the market moved back to the upside, moved back, and you can see there's a battle going on here because of this prospect now that interest rates might just go up. And if the professionals have got any thing about them, I wouldn't be surprised if they don't all start getting out of their positions in readiness for a potential rate hike. I'm struggling this morning. So again, we'll have to wait and see. I don't think she'll do it, but who knows? There are madder people in the world and have been madder, so it'll be interesting to see how that actually pans out. In the daily chart, you can see the 17,900 still giving this market some grief. This needs to be taken out to go back to the 17,978 and also back to that all-time high figure there of 18,152. And news-wise today, what have we got to move the market? Nothing for this afternoon, so it could be a fairly quiet affair, just to be warned. Let's just go back to the 5-minute chart. Let's have a look, see what the market's doing at the moment. No, it's very quiet. We haven't got much of a range there at all. The market's sitting above the 17,900. So we need a bit more volatility and momentum to move this market. In the implied volatility, well, this is very strange because the big down move on Friday saw the implied volatility actually move lower compared to Thursday, 11.80. And again, this is reflected in the chart. So it's a matter of waiting to see if this figure can go lower. That would be great if it does. If the market goes back to the all-time highs before December the 16th, I wouldn't be surprised at all. So this gives the professionals the chance to offload and get out and cover the positions just in case Yellen does decide to increase rates as well. So here we have the implied volatility trading down quite nicely. We're getting back into these lows where we're guaranteed a correction coming soon, and it's never failed to do so. All of these spikes up are still a couple of 1,000-point drops, this one being a big one, of course, back on August the 24th. So it's just a matter of time. And again, between now and the 16th of December, we're going to hear all sorts of nonsense about why rates should go up, why rates shouldn't go up, and so on and so forth. Right, that's it for this morning. I will see you in tomorrow's. Have a good day, and as ever, thank you for your support and also for watching. See you in the next one.